So according to the data, when you see this line crossed, that's when you know it's time to head for the exits in residential real estate and that the massive run-up in price is over. The inflation is over, and then in all likelihood, a massive correction is on the way. Hey everybody, Jared Jones, broker owner of Jones Group Real Estate on Plant Street in Winter Garden. I'm a residential expert with 19 years of home selling experience, almost 4,000 homes sold in my career. And I've got some exciting news. If you own a home in 34787 or the surrounding, the real estate market is on fire. Anything that is for sale is selling $30,000, $40,000 over asking price, some cases much, much more. But there are some unbelievable records that were set last month that I want to share with you right now. So let's check it out. So number one, the first data point I want to show you is what's called average days on market. The average days on market, just like it says, is the pace at which homes sell. It's an aggregate of all the homes in the area, in the MLS that have sold, and you want to take a look at it. Obviously, it shows the timeline for a home to sell is at a record low. So this last month, it was 64 days, which if you can see the graph is down here at the bottom. It is the lowest time frame in terms of how fast homes are selling at any point going back to August of 2005. Simply put, homes are flying. As soon as they come on the market, there's a buyer for the house and it's going to sell. By the way, the day on market for this year, last month, is 42% lower than it was a year ago. And last year, at this time, it was starting to move. The lockdown had ended, housing was back in flow in 2020 at this time. So this is incredibly fast paced. The next graph I want to show you is a record that has never been hit on record, at least from the data access point that I can get, which runs about 18 years deep. It's called the average sold to asking ratio. The average sold to ask price is a ratio that we monitor, which really is a driver of how much over an asking price a seller can get or how close to their asking price can they get. This last month, we went over 100%, 100.3% aggregate average. To give you an idea, most times the housing market runs 96, 97% to asking price across the board. In Central Florida, there has never been a time, particularly in 34787, where that number has gone over 100%, which just speaks to the incredible velocity of how fast things are selling. The last thing that I want to share with you, which is also glaring, is the average sale price. Now, in Winter Garden, a record was reached on average sale price at $529,910 for the average house price sold. Now, what's incredible about this is that number is 27% above a year ago. 27% price climb for 34787. Clearly, everything is selling at record pace. But let's talk about the economics of this. No matter if you live in this area or anywhere else in Central Florida or even out of state, what is driving the housing market? Why is it so expensive? Well, on one hand, you obviously know that commodities, the price of everything, is skyrocketing. The data point for lumber has tripled in price. So the cost of creating new inventory has gotten extremely more expensive. So right now it costs $36,000 more per home than a year ago in lumber. Not to mention paint costs is more, metals and things of that nature, all gone up in price. So the housing prices have climbed purely on that reason. And in Florida particularly, where many other states are seeing a drop in new construction permits, Florida has seen an increase. Now, Central Florida marketplace, year over year, according to the National Association of Home Builders, we're right around 6% increase in new construction permits pulled over last year. So we're seeing that not even a double-digit growth, but we're seeing growth when a lot of the other marketplaces throughout the country are seeing a decline. Now, there's many other marketplaces. Tampa, for instance, is nearly 30% up in new construction permits. Jacksonville is in the 40% range. Many other marketplaces in Central Florida are seeing really high double-digit growth in the amount of homes built. But what is driving price, and what is the driver, that an indicator that we need to watch that will impact your home price, that will possibly slow things down? Well, the number one driver that I believe is the interest rate. So interest rates, as you know, are at record lows. Okay, so when people can buy homes, they buy homes on payment. And even as I'm seeing a lot of my own homes that we're selling here in Jones Group Real Estate, we're hitting the market, overwhelmingly, the offers are financed, okay? So at any price point in between, they're financed offers. Now, for sure, there's a varying degree of down payments. And for sure, there's an occasional cash offer coming in. But I'm going to tell you that the majority share, I would estimate in my own experience, 60-75% range, high 2/3 is a financed offer. Now, the price of anything to a home buyer that's getting financed is the monthly payment. And while the interest rates stay artificially low, those payments are lower, buyers can bid the houses higher, and that's what you're seeing happen in the market. Now, there's also a lot of geographic arbitrage going on. And what I'm saying when I say that is there's a lot of movement throughout the country of people who are selling a home in a high cost area and dropping down into a lower cost area. For instance, where the homes might be cheaper than where they came from, or the tax base, the lack of a state income tax might be of value to them. And so there's direct data that shows that the lower cost of living states are reaping a massive migration where geographic arbitrage is taking place right now. I'm going to show you exact data points to that. But the overarching reason to why we're seeing so much movement and such high demand really throughout the entire country is that interest rates are super, super low. Now, why is that? Well, there's a recent Bloomberg piece that said the Fed should get out of the mortgage market. Now, you may not know this, but the Fed has been pumping cash into the markets. Not just the stock market behind the scenes, but also in the housing market. So back in April of last year, the Fed started buying mortgage-backed securities at a rate of around $40 billion a month. Now, they've never taken their foot off the gas. When the Fed buys mortgage-backed securities and increases demand and purchasing of those mortgage-backed securities, interest rates stay low, okay? Now, Jerome Powell was interviewed back in April, and he stuttered around and he didn't really have a clear answer, but he said that, you know what, we started buying mortgage-backed securities the last time the market crashed, so we just did it again. And he said, we're back in it now. And he really did not say that they would ever stop anytime soon, but that they would consider a tapering. He also didn't give any clear indication as to what needs to happen for the Fed to stop the mortgage-backed security buying, in turn affect interest rates. One of JP Morgan's asset specialists said the following: every indication is that the central bank will not touch mortgage-backed security buying until it starts a complete tapering. The specialist's name was Bob Michel, and what he said is he believes that that won't even start until January of 2022, and then what will happen is the $40 billion a month in buying will go to $35 billion a month, then $30 billion, and then so on. What Bank of America, JP Morgan, what all the specialists of those companies said in the wake of the recent Jerome Powell interview is that there's really not going to be an aggressive backing off of the Fed's tinkering with the mortgage-backed securities. So what that means is, in all likelihood, based on Jerome Powell's comments, what specialists are saying to us is that the interest rates are going to stay artificially low for a considerable time into the future. Well, let's take a look at the impact that's having on Florida. Well, Islander News back last month said almost 330,000 people have moved to Florida in the past year, and the migration is expected to continue into 2025. The article was written, the journalist said that according to the state's Office of Economic and Demographic Research, an estimated 329,700 new residents settled in Florida between April 20 and April 21. They go on to say that the website move.org reported that Florida was the #1 destination for relocating Americans in 2020. The website used the metrics from the U.S. Census Bureau. Okay, so now U-Haul, by the way, have their own move data because U-Haul owns a lot of moving services. They said that Florida was the third most popular state in moving demographics. The National Association of Realtors report a total of 8.9 million people changed address since the start of the pandemic. They said that close to 28% of people relocating to Florida came from either Texas, 15% from New York, and a little over 6% coming from California. So like I was saying earlier, and where I'm from, you can actually follow the money. There's a lot of revenue trackers that show that most of Central Florida, Orlando area migration is coming from New York. So New York is actually the #1 mover into our area. And why is that? Well, it's what I told you earlier, geographic arbitrage. Folks are coming in from out of state, they have a lot of cash. There's situations where folks that live in expensive areas can sell a property, move to a lower cost area, and maybe one of the partners or the spouses involved can stop working in the household because of the lower housing expenses. So the end of this report says Florida's popularity isn't expected to end anytime soon. It's expected to gain 845 new residents per day projected into 2025. 845 per day to 2025. That's the state's predictions, okay? Which means that there's going to be massive demand from outsiders. What is that going to happen to the locals? Well, let's take a look. Bloomberg did an economic piece called "COVID Has Made Orlando Less Affordable Than San Francisco." Justin Fox did a comparison where he looked at the Bureau of Labor Statistics median wage for all these metropolitan areas, compared that to rental data for each of the following areas. It turns out that he found, and I'll actually show this up on the screen, Orlando Kissimmee metro area actually came in just above San Francisco, California, and also just below San Bernardino, Riverside area. And what he found, so basically what he did is he took the average rent. So he takes the average rent, he takes the average income, and then found that it takes a person almost 2 weeks of work just to pay for their housing expense on the basic. I mean, I don't know anybody that's getting a rental at $1,328 a month. They're saying that's what the average rent is in the Orlando area as of April 2021, okay? So that's probably backwards looking data because it feels like it's a lot more expensive. The reality of all this is you're creating a lot higher cost across the board, okay? The Fed is hitting the gas pedal. The reality is there's not a real serious answer as to why. There's actually a lot of dysfunction that's now happening because everything is so artificially cheap. And what's going to happen is housing prices are going to continue to climb. If this doesn't change, lumber will continue to climb because there's going to be builders that are going to be wanting to buy the lumber and rents are going to go up. The reality is that those of you that are trying to perfectly time the market, I know there's some people that feel like, hey, you know what, I've got to wait this thing out. Or what if I buy now, am I going to get, am I going to get crushed under a relapsed house price that's just going to come back down? The reality is you need to have a 5 to 10 year plan on what you're doing with housing. This idea that you can jump around and all that kind of stuff, don't think that way. You need to think long term. The reality is if you are choosing to rent, you are going to rent in a marketplace that's going to have inflation and climbing market prices. I mean, I am hearing people that are going into rental situations where the landlord now finds out their house is worth way more and they obviously want to sell it. So there's a great amount of instability in the rental market from a lot of different vantage points, as there is in the housing market. The best thing that you can do is have a long-term plan. Make sure that if you are going to buy, that you can afford it, that you can pay it off rapidly if possible, or that you can actually, that you have a good stability in your income structure. Because if that's not the case, then maybe you can't buy. But based on what we are hearing and based on how the housing market works and the data, this ride won't end anytime soon. And so I would predict, I've been saying it for a long time, Central Florida is due for a second boom. We're seeing one ride up, we got another ride right in front of us. There's so many northern states that are now having an older population finally vaccinated that were waiting to come here that are coming now. They're going to be coming into 2022. So if anything, housing prices are just going to go up. The faster that if you are outside looking in that you can secure and fix a price in an upward market, the better off you're going to be. As painful as it sounds, that's the truth. All right, until next month, we'll talk to you guys real soon. By the way, let's continue the discussions in the comments. Am I right? Am I wrong? Is it going to crash? Is it going to boom? What's going to happen? What's your take on it? Do you disagree with me? I want to hear from you. Let me know.